Yeah, Sri, I think that is our base case. I mean, historically, emerging markets tend to trade in terms of relative performance fairly closely in line with the dollar. And so I think our team's view is that, if the Fed does start to begin a easing cycle and the dollar does start to weaken, we should finally see emerging markets start to have some pretty strong relative performance. And when it comes to these sort of embattled frontier economies, let's remember that while the Fed hiked rates about 500 basis points, these economies hiked their interest rates anywhere between 15 to 40 percentage points. And so I think any sort of global easing cycle would benefit both these markets as people move away from high-yielding fixed income into equities, but also their economies. As rates fall, we should see much more lending activity pick up. So we do think this would be quite positive for emerging and especially frontier markets.
What about the balance of risks, though, Stephen? Because it just feels like there are a number of supply-side shocks waiting in the wings, waiting to really jump out. And if they do materialize, then inflation could spike. And that could be a big problem for this entire narrative surrounding immaculate disinflation. You've got the risk of the geopolitics in the Middle East. You've got a possible trade war, and Ukraine and Russia is still looking like a big problem. Do you fear that inflation may spike? And if it does it take dollar and yields with it? And does that mean that we're going to have to rip up the script associated with the EMs?
Yeah, it's a great question. I mean, I think we've sort of been of the view that a lot of the inflation has been transitory, but certainly, as things progress, if there are more supply shocks, that could muddle the picture a bit, but that's certainly not our base case. I do think that a lot of, as I said, the inflation appears to be transitory. And going forward, I think the idea is more that, emerging markets should start to outperform. And I think, as I said earlier, one really interesting thing is that, these are not markets that are priced for perfection. I think I would be a little more concerned if these were trading at sort of, like a PE of, say, 20 times. Some of these markets are much more, inexpensive at this moment, and the currencies reflect that as well. So I think the fact that they're not priced for perfection gives us a little bit of comfort.